You're muted.
Hello and welcome to the webinar. We have two exciting guests with us today. Deb Holloway with Christensen Financial. She sits on the lender advisory board for the Florida Housing for over 10 years. And she's going to be talking about some interesting mortgages coming up for first-time home buyers. Also on the webinar today is J.D. Vangilder, who is the owner and broker of Your Home Sold Guaranteed. So welcome, guest, and take it away, JD.
All right. Thank you, Jean. So we're going to go over some of the programs available to first-time home buyers. Deb is going to talk a lot about these programs. I'm just going to basically introduce these for us, but really what kind of assistance is available and what does it take to get into your first home is what we're going to go over. So why are we really conducting this meeting? I mean, given the price of rentals in the market these days, does it make more sense to buy or to lease a home? And we want to show you some different things that'll help you get into a home with minimal down payment monies. And a lot of times this is your monthly mortgage payments are cheaper than your rental payment. The rental payment would cover your mortgage payment plus your water bill, electric bill, and a few other things. So it's really advantageous to own your own home. So we're going to go through some of these programs and get you some information. Now, what topics we're going to cover is basically what defines a first-time buyer. The down payment assistance programs, there's a few common elements, but there are FHA and conventional programs. There's also another program that doesn't require you to be a first-time buyer, and that is a first responder program. What's the role of credit scores in all of this, and then go over a quick scenario of renting versus owning, just to show you kind of a cost comparison as to how those two measure up. So what is a first-time home buyer? Obviously, that is someone that has never owned a home, but the caveat goes a little bit further than that. You just don't have to have owned a home for the last 3 years. So you cannot have been on title or deed of a home within the last 3 years. If you have not owned a home in the last 3 years, then you qualify as a first-time buyer under these terms, which is very beneficial if you've ever been through a divorce and separated and now you're looking to buy a home without your former spouse or whatnot. These programs are available to you. So some of the down payment assistance programs, we're going to go over two different types, a FHA or a conventional loan. An FHA, for those who don't know, Federal Housing Administration. And there's common elements to both of those we'll discuss a little bit. And then, of course, the Salute Our Soldiers program that is very beneficial for soldiers. Don't even have to be a first-time buyer for that particular program. So of the down payment assistance programs, there are some very common elements. All of the programs require that you attend a first-time buyer's class. Now you can enroll for this, and there's a link to that on this screen. And once you've completed that, you hand that to Deb, the lender, and to show that you've completed the course. All of the program requires a minimum of 640 credit score. There's a little bit more on credit scores that we'll get into as we go through this a little bit. But another caveat to this is even to help with more closing costs is seller assistance is still available. Now that's something that I'll go into a little bit more detail as we go through this, but seller assistance basically help you cover other closing costs that include inspections, surveys, other different things that you have to pay for out of pocket that are not part of your down payment monies. So now, Deb, I'd like you to talk a little bit about these programs, and here's some of the highlights of what we're going to go over. But if you could elaborate on this a little bit and tell these folks what they can expect from these programs.
I sure can. So there are really three types of first mortgages in conjunction with down payment and closing cost assistance through Florida Housing. The first, which is one of the more credit lenient, um, is FHA. FHA, any of the programs through Florida Housing requires that any buyer that's on the loan has a 640 middle credit score or better. And that's Florida Housing standard, not ours as a lender. And what that gives you, if you qualify for a first mortgage based on FHA financing through Florida Housing gives you $10,000 in down payment and closing cost assistance. And that $10,000 is first used towards the 3.5% required down payment, and any remaining goes towards your closing costs. And as you just heard, also you can request, and you would work with your realtor on this. FHA allows up to 6% of the contract sales price that a seller can contribute, but not more than what is actually needed. And that would allow you to get into a home with very little cash out of your pocket. Florida Housing doesn't require that you have any funds involved in the transaction if the seller is also paying a portion of your cost. The other program that we have is conventional. Conventional is 97% financing. It does require a little bit better credit score or credit mix. And with that program, you have several options as far as grants go. And the grants are either 3%, 4%, or 5% of your loan amount. And that money is recorded as what we call a silent second mortgage. And there's no payments or any interest made on those funds. And each year that you live in the home, 20% of the original grant amount is forgiven as long as you're current on your first mortgage. So simply by living in the home for 5 years, if you qualify for 97% conventional financing, then that assistance is 100% forgiven. You never have to repay that. The other program is VA, Salute Our Soldiers program. And you do not have to be considered, if you're a veteran, to be a first-time home buyer to take advantage of that program. And that program gives you $10,000 in assistance. And just like FHA, that's recorded as a silent second mortgage with no interest and no payments made on that money. And VA loans are typically 100% financing. So that would, in most price points, pay all of your closing costs and your escrows for taxes and insurance and the first year of homeowners insurance premium. And if there's any money remaining from that $10,000, then we actually lower your loan amount. So we do absorb the entire $10,000. Also on any of these programs, in every mortgaged property, the state of Florida collects what's called intangible tax and county tax stamps. And the factor is 0.55% of whatever your loan amount is. That intangible tax and county tax stamps are waived when you use one of these programs through Florida Housing. So you pay a little bit less in cost. So it really is a win-win to get you into a home if you don't have, all of the funds that are required as far as down payment and closing costs are concerned.
Those are great facts about that. Now, through this presentation, which we can be provided to anyone attending the session, the FHA has different loan max limits. So 311,980 is the actual loan maximum for the FHA program. Is this correct, Debbie?
That's the max sales price. Mm-hmm.
Right.
Yeah. And then the loan amount's 96.5% of that. Mm-hmm.
Understood. Now, there are some different some income requirements with these with the FHA loans, and I know that's a little bit different than the conventional loan. So the
That is
household income for those, can you kind of go over what the income limits are on for the FHA?
I sure can. So if you have a household of 1 to 2 for FHA, the income limit for the program is 72,600. And even if, let's say we have two spouses, they both work, but only one's going to be on the loan, we still have to take in, not for qualifying for the mortgage, but for making sure you stay under the limit, income limit for the program, we have to take into consideration anyone who lives in the household over the age of 18 that's employed. And then 3+, the household income for that program is 83,490. Now, on the conventional loans that are through Florida Housing, they have higher higher income limits, and we only take into consideration whoever is on the loan. So we don't have to look at the entire household when we're doing those loans. So it does possibly enable you to qualify at a higher income level for those programs.
That is good to know as far as what the income limits are, so that they understand what the minimum and what the maximum requirements are with that. Now, for the FHA assistance programs, you talked about this in pretty good detail. I think this slide is pretty much covered, because you said that this is recorded as a silent second, so they pay no interest on that while they live in the home, and those funds are then just paid back at the time of sale.
Correct. Yeah. And you would just pay that back again with no interest. It's like borrowing money from a relative that says, well, pay me back when you sell your home, and they don't charge you any interest. It's really a phenomenal program, and it's a great way to get into a home. And at this time of year, there's a lot of folks that are getting their tax returns, things like that. What better way to, secure a home for you and your family than to use that in combination with these programs and possibly seller contribution to get into a property. When you rent, you're paying 100% interest. You have nothing to show for your hard work. 90% of Americans gain wealth through home ownership. And you're not going to run into a situation, which I see a lot of folks in now, which is one, your lease is up and now your landlord's raising the rent by 100, 200 or more per month, or they decide to sell the home that you've been renting, and then you're stuck scrambling trying to find a place to live. So these programs really come into play when you haven't had that time to save up the money needed. And, it's really just a great way to get into your first home.
I agree, Debbie. And speaking of the rental prices, the rates going up, I've seen that happen on more than one occasion, where the rental prices have gone up $400 per month, and people just can't afford that kind of drastic change on a monthly basis. So they're forced to find another rental, which is equally as bad, or try to find a way to buy a home. And if you don't have the money saved, like you said, these programs are going to be a godsend to help get you into a home without a lot of out-of-pocket right up front. So I think good to have that. Now, talking about the conventional in a little more detail, it looks like the maximum loan or maximum purchase price for the conventional is $381,303 or 308. I'm sorry.
That is correct. Yeah, that's the max sales price.
Can you go over a little bit about what the income limits are on the conventional versus FHA?
I sure can. So your household of 1 to 2, and keep in mind when I say household, I mean who's on my loan, because with the conventional, if let's say we have two spouses and they're both working, but only one is going to be on the loan, and I'm only using their income to qualify them for the financing, then I don't have to take into consideration the other spouse's income towards the income limit. And so a household of 1 to 2 can earn up to $83,490, and households of 3 up, the qualifying income can go up to $87,120. And on that program, you get a 3%, 4%, or 5% grant. And those grants you don't have to repay as long as you live in the home for a 5-year period, because it's forgiven at 20% per year. So really phenomenal program there. And it's only a 3% down, whereas FHA has a 3.5% down. So a little bit more of the down payment assistance funds can go towards your closing costs on the conventional loans.
Right. I really like that fact about these programs. Another thing that should be noted on these is that the Florida housing is what dictates the terms and rates on these loans. Can you kind of describe a little bit about that process?
I sure can. So with most mortgage loans, lenders control the rates, and they vary per lender per day. With any loan program, whether it's FHA, VA, or conventional through Florida Housing dictates the rates. And how that works is once you as a buyer are under contract and you're within a certain time frame to close, typically 30 to 45 days, we will register your loan with the state, and that locks in the interest rate for the program you're utilizing that day. So any participating lender in this program, there's no rate competition. They're not going to be locking you at a different rate. It's across the board the same rate, because Florida Housing dictates that. Florida Housing dictates the terms on the loans as well, not myself as a lender. So it's a very fair program.
Right. Exactly. You're not competing to or trying to shop the rate or trying to find the best deal.
Correct, because it is what it is with Florida Housing. Mm-hmm.
So like you were talking about with the conventional loan programs, there's a couple of different programs out there. You can do the 3%, 4%, or 5%, but there's also one that has $7,500 in assistance. Is that,
That's true.
and that's still treated as a second mortgage as well. Can you go over all three of those or four of those different programs?
I can. So if you do not want to use one of the grants, or the 3, 4, or 5% grant is not something that you're interested in, then there's another option, which is $7,500 in assistance. And that's recorded as a silent second. And those funds are repayable. So when you sell, refinance, or the property is no longer your primary, you would give the $7,500 back to Florida Housing at that time. So there's definitely a lot of options with conventional financing. And again, it's 97% first mortgage, 3% down, and that 3%, the assistance funds are applied to that first, and then the remainder goes towards closing costs. And on a conventional loan, a seller can pay up to 3% of the contract sales price towards your buyer cost, if the offer is able to be structured that way. And definitely that's where your realtor's expertise and advice comes into play when you're making the offer.
Absolutely. Now, a couple of these slides go through the different options we see here, and it's just the 3%, 4%, 5%. All of those have basically the same terms. Your grant is recorded as a second mortgage. There are no payments made on the grant funds, and it's forgiven at 20% per year on those three options.
Correct.
So very, very good terms on that assistance program. So a little bit about Salute Your Soldiers. Can you go over kind of the details about what that involves and what the credit score and income limits are for that particular program?
I sure can. So for the Salute Our Soldiers program, this program is a little unique. It's different than FHA because even though it's a government loan type, I don't have to use the household income towards the income limit. It's whoever is on my loan, that's the income that I use towards the limit. A household of 1 to 2 can earn up to $83,490, and a household of 3 or more can earn up to $87,120. And the max sales price is different on this program. They can actually, if the debt to income ratio works, they can actually purchase a home up to $449,269. The minimum score for this program is a middle score of 640 or above. And the 10,000 that you get is recorded as the silent second. So no payments, no interest. But when you sell or refinance the home, or it's no longer your primary residence, then you would repay that 10K back to Florida Housing with no interest. Sellers can also contribute up to 6% of the contract sales price, not to exceed actual cost on this program. And if they do that, especially since VA loans are typically 100%, you can use the 10,000 as a down payment and take a lower loan amount if you so choose. So there's a lot of different options. And again, I would defer to your realtors when you're structuring an offer to make sure it's competitive in this market, and that you are able to put in an offer and have it accepted. And again, your realtor will give you the information you need to make an informed choice as far as that sort of thing goes. Debt to income ratio, if your score is 640 to 679, the debt to income ratio, including your new housing payment, is at 45%. And if your score is over 680, you can actually have a little bit more debt, to include your new housing payment, and it'll go up to 50% on this program. If you are active duty, then you could not have owned or been on title to a primary residence within the last 3 years. But if you are a veteran, you could have owned a home within the last 3 years. There's a veteran's exception to that rule.
Yeah, very good to know. I like the fact that this is offered, and I like the fact that the sales price is considerably higher for this option for the veterans.
Oh, absolutely. In this market, it's a very realistic sales price as well.
And one thing I want to mention about what you said, Debbie, that I think is critical in today's market is the fact that the VA loan is 100% financing. The 10,000 can be used to as down, as down payment monies to lower the terms, or if we want to offer a little bit over the asking price and have that to make up the difference of an appraisal shortfall or something like that. In that situation, I believe that is allowable under these terms. Would you agree?
Yes, sir.
Okay. So, and in today's market, a little bit harder to get seller assistance, but we have had that happen for us if we structure it the right way. So, I don't ever count that out, because it's depending on how you structure the program and what the communication that you use with the seller and the seller's agent. So, we definitely have some programs that have worked out well to also get seller assistance. So now I want to talk a little bit about the credit scores and the role of the credit scores. I know we said that the minimum for the program is 640, a middle score of 640, but generally for conventional, you want to be in the 680 range. Can you just kind of go over the value of the credit scores a little bit more?
I sure can. So when you're doing conventional financing, lenders have to be able to run your loan through an automated underwriting system that Fannie Mae and Freddie Mac have. And we have to be able to get an approval through those systems. And sometimes, even though Florida Housing only requires a 640 middle score for conventional through their program, I'm not able to obtain an approval at that lower score. So just because Florida Housing says the minimum for conventional 640, I don't want to mislead anyone and think that that is automatically, no matter what, it's going to go through. So that is one of the caveats. I do have to also run the loan through the automated system and get an approval. And again, at the lower scores, the 640, unless there's really some compensating factors such as, reserves after closing, that sort of thing, it's probably not going to be an approval for conventional. That's when we would look more towards the FHA product, because FHA is typically more credit lenient, and we can usually still get an approval at that 640. That's a very realistic number to be able to get an FHA approval on.
Right. And there's one thing I'd like to let everyone know that's watching this today is that you don't want to base what you think your credit score is on what Credit Karma tells you it is, or what some of the online websites tell you your score is, because when they pull your credit from all three agencies for the mortgage, it can be quite a bit different than what you see on a Credit Karma or any of these other sites. Can you give a kind of an example of that, maybe, Debbie?
Well, I can, because there's a reason for that. I get a lot of calls and buyers will say, well, I was on Credit Karma, or I'm looking at my statement from, Capital One, and it gives me my score, and it says my score is, it's only 620. The scores that you're getting through Credit Karma, Capital One, don't rely on them. Those are what we call a consumer educational score. Lenders use a different scoring model. So our score that we pull is going to be inherently different. It's not because, and when a lender pulls your score, if it's lower, I hear a lot of buyers say, well, it's because somebody pulled my credit. It's not. It's because we're using a different scoring model. And the ones that lender uses, which is the FICO, is the scoring model is set up to define the propensity to repay long-term mortgage debt. So there's different factors that they look at to generate those scores. I've also had folks that think that they've got a 620 score, and they've called me, we've pulled credit, and their score is actually 660. So you don't want to shortchange yourself. Have an actual lender pull your credit, do a pre-qualification, because in this market, that's critical. When you're first looking to get into the market, don't just assume your score is at a certain thing because you've seen it on a Credit Karma or on something your credit card provider has sent over to you. Because again, that's not going to be the same as what I'm going to pull. It may be close and it may be very far away, and there's no way to tell until it's actually pulled. Lenders use the middle score of the three bureaus. It's not a blended score. It's not anything like that. We discard the highest one, we discard the lowest, and the middle score becomes your file score. And if there's two buyers on the loan, we use the middle score of the lowest scoring buyer as the file score. So anyone on the loan has to have at least the minimum in order to obtain one of these programs. And the good thing about it is, through Florida Housing, the rate is the same. If you have, let's say we're doing FHA, the rate is the same if you have a 640 score or a 740 score. So that's also a benefit to using this program. Same with conventional. If you've got a 680 score or a 780 score, you're still going to get the same rate on the program through Florida Housing. And that's certainly not the case with regular mortgage lending. Your score is definitely a deciding factor on where your interest rate will lay on a regular loan, not a down payment assistance loan through Florida Housing.
Absolutely. And I think that's excellent information for everyone to know, that what you see publicly produced is not generally what the lenders are going to see. So certainly do not rely on that information. I've been down that road with buyers many times, and your score may be higher than what you think. So just don't rely on what's publicly available. And so aside from all of that, what I did want to talk, before I get into the renting versus owning, a little bit about seller assistance. Now, sellers assistance for the VA or the FHA, sellers are allowed to contribute up to 6% of a sale price. So if you are buying simple numbers, $100,000 home, they're allowed to contribute $6,000 towards your closing costs, which is a considerable amount of different things that can be covered with that. But as Debbie said, they can't cover more than what your what your closing costs are. So if your closing costs happen to be 4,200, they're only covering that, not an additional the remaining of that 6%. It's up to 6%. So those are good things to know. And depending on the market, we have had seller assistance and many times past. It's a little bit harder right now because extremely hot market houses are typically selling for over asking price, but we still have been able to get that done. So don't count that out either as we structure a program for you. Now, I mentioned earlier about renting a home, and let's take a round number price. The average for this market based on the fair market rent value website, which some of these links are going to be provided in the back of this presentation, so you can check these out for yourself. But $1,600 for a 3-bedroom home, so $1,600 per month. Now, typically, your deposit monies on that is going to be a first month's plus a security deposit as a minimum. Depending on your credit score, they might require first, last, and security. So you're paying between $3,200 and $4,800 upfront to get into a rental. So there is what can be considered a good percentage of a down payment for a home, especially if you're getting one of these assistance programs to help you out. So for instance, let's take a $250,000 home. A home at 4.25% interest. Now that's higher than what the rates are today, but just for the sake of argument in this example, that's what I used. Your monthly payment on a $250,000 house would roughly be $1,600, depending on whether you went FHA or conventional. Kind of a breakdown of the difference between those two is shown at the bottom of this. But your deposit of 3.5% on a $250,000 home is $8,750. So if you've got a $10,000 assistance programs, that covers your complete down payment plus a little bit of your closing costs. So you're getting into a home for less money than it would take you to get into a rental, because there's no rental assistance programs. There's only buyer assistance programs. So don't sell yourself short on what it can take to actually get you into a home. It can be cheaper and definitely better for you to own a home because you're earning equity in that home. Now, Debbie also talked about repaying this over the life of the loan. Some of the programs, obviously, you didn't have to repay. Some of them were forgiven at 20% every 5 years over a 5-year period. But if you had to pay that back, your equity that you're earning in that home is going to more than cover what you're paying back, plus give you money to move up to a new home if you decide to upscale in the future. You're starting as a first-time buyer. You need a 3-bedroom home, but now you have a couple of kids, and this 3-bedroom home's getting too small, so you need to get something new. By the time that rolls around, you have earned equity in that home, and equity is really a great thing to capitalize on when you're moving up to that new home, because it will cover many times more than excess of what your down payment and closing costs would be. So there's a little breakdown showing you how you can get into a home for cheaper than it would be to get into a rental. Some of the references that we have on this, I pulled the average rental data from rentdata.org. You can check that out. National Association of Realtors tells us that 1 in 3 home buyers is a new home buyer. And the reason only 1 in 3 are is because they don't know about some of these programs. If you want to learn more details about buyers and things like that, you can certainly go to the Your Home Sold Guaranteed website, which is yhsgrpioneer.com. You can also get information about these loans through Debbie's website at homeloansbydeb.com. You can actually, I think on your website, Deb, they can actually start filling out an application online. Is this correct?
They sure can. They can apply online or they can call my direct cell at 321-258-3875. and do the application over the phone. Takes maybe 10 minutes. It's very simple.
Oh, that's excellent to know. And also, if you're interested in taking the class, the link was in the previous presentation, but also a link to that FreddieMacLearning.com tutorial is referenced right there as well.
Yep, it's a great course and it's free, and you do need to take the course when you utilize one of the down payment assistance programs, no matter which type, through Florida Housing. And that certificate that you get at the end of the course is good for 2 years. So go ahead and get it done. It costs you nothing.
That's very good to know. Of course, our contact information is here. I've listed both company phone numbers as well as their websites. My personal contact information, and that is my direct cell phone number if you wanted to get a hold of me. And I believe that is your cell phone number as well, right, Debbie?
It is. The one under my name is the 321-258-3875, and the other is my office line. My office is right in Suntree, right on Suntree Boulevard between US 1 and Wickham.
All right. Our office here at Your Home Sold Guaranteed Realty is at 575 South Wickham Road, right here in West Melbourne. If anybody wants to stop in and ask us anything about either of any of these programs or what is available in the market of housing today. Is there anything else that you wanted to talk about, Debbie?
Well, I think it's really important when you're first looking to purchase a home, your very first steps, if you've never done this before, is to get pre-qualified and make sure that you're able to purchase, or if you're not quite there yet, get the correct advice so that you can take the steps to, begin your home buying journey. And then absolutely, you need to get with an experienced realtor who can guide you, especially in this market, and can work on your behalf. And Your Home Sold Guarantee Realty is an incredible place to start. Their office is right on Wickham Road, centrally located in Brevard. And they've helped many first-time home buyers and move-up buyers get into a home on terms that are much better than renting. Definitely give them a call. They can also let you know what's available in the market. They can do searches specific to your requirements. And really, it's just a wonderful place to start. They also are big on educating you on what the market's like, so you know what you're looking for when you start your home search.
Well, yeah, thank you, Debbie. And another thing that I wanted to mention to the buyers out there is part of what we do is search for homes that are not on the market. I know everybody's first go-to is maybe Zillow or Trulia or Realtor.com, something online to find the homes. But what we do is actively search for homes that meet your criteria. So we do find homes that are not on the market, and we can generally get into a home that is at better terms because it has not hit the market yet. So don't be afraid to give us a call about what you're looking for, and we will start searching for a home that is not readily available on the market. So if you are in the market for a home, give us a call. If you are looking to get a loan, learn anything else about these first-time buyer programs, or a home loan for any purchase, give Debbie a call, and we'll get you in there without any hassle. All right, I think that's about all I wanted to go over today. Debbie, I appreciate you coming on board and joining us here to explain all these wonderful benefit programs that'll help first-time buyers.
Absolutely. It's my pleasure. Again, you're paying 100% in interest when you rent. You've got nothing to show for your hard work. And getting into a home may seem daunting in the beginning, But, we're definitely experts and can guide you and let you know what loan programs are out there. And then your home sold guarantee Realty can help you find that home. Thank you so much for your time this evening.
All right. Thank you. And thanks everyone for joining us.